Negotiators were working late into the evening and have been moving closer to a compromise position just as that June 1st deadline nears. According to Reuters, there's now just a $70 billion gap between their two positions, with the two sides expected to agree to a top-line spending number first and then let lawmakers hammer out the program details through the traditional budget process. The White House, the Treasury Department, and the U.S. Office of Management and Budget all radio silent on the talks, which, as of yesterday, would have required the administration to offer more savings to win over Republicans. And Democrats, well, they're not happy.
Republicans are driving us down a dangerous road of default or have presented the American people with another unacceptable choice, which is devastating cuts to children, devastating cuts to Medicaid, devastating cuts to nutrition, devastating cuts to education.
But they're now racing against the clock. In order to pass any agreement by June 1st, a deal would need to be reached by tomorrow at latest. House Speaker Kevin McCarthy still promising members 3 whole days to read the deal before voting. The House could then vote on Tuesday, the Senate on Wednesday, May 31st, and then it would be up to Congress after that to figure out where specific cuts would come from before another deadline, this one on October 1st, to fund the government. Kelly?
Wow. So in some ways, the deadline is tomorrow. We don't feel that close. Kayla, thank you. Meantime, the debt ceiling fight is leading one of the big 3 credit rating agencies to put the country's AAA rating on negative watch. Leslie Picker with the details. Everyone, I mean, last night, Leslie, busy news night, but this was one we couldn't miss.
Yeah, we've been kind of waiting to see what those big 3 would do, but it's Fitch with a shot across the bow to Congress. The ratings agency putting the U.S. on what's known as rating watch negative, telling lawmakers to raise the debt limit by the deadline, ensure debt securities are paid on time and in full, and keep levels of debt to GDP in check, or else risk a ratings downgrade from AAA. Fitch says it still believes there will be a resolution before the deadline, but says, quote, risks have risen that the debt limit will not be raised or suspended before the X date, and consequently the government could begin to miss payments on some of its obligations. But some believe the ratings agencies should be doing more in the meantime. We spoke a short while ago with Moritz Kramer, who was part of that group that made the decision to downgrade the U.S. rating while at S&P in 2011. He told us that the ratings agencies this time around are acting, quote, quite late and quite timidly.
If you have a political system that gambles this way with the creditworthiness of the nation and the full faith and credit of the country, it has no business in AAA land. Because what we're seeing now evolving, I think, is at least as severe as it was in 2011 in terms of the difficulty of finding a way out. And this is just not what you would expect, such a dysfunctional system of a country with the highest level of creditworthiness.
While the Fitch news seems to have a muted impact on the stock market today, volatility in prior episodes actually crept up closer to the deadline and actually beyond that deadline date. However, Treasury markets responded much earlier to the debt ceiling risks this time around than they have in prior debt ceiling episodes, Kelly.
That's surprising, actually, and you're right. They have, because we could potentially be a little ways off still. Leslie, thank you.